soon as I got off doing it, Bitcoin spiked up, got above 100,000 for the first time ever. It almost hit 104,000 on that spike, and then it stayed above 100,000 for most of the trading day on Thursday. And then late in the day, after the U.S. stock market closed, there was a big sell order that came in, and Bitcoin collapsed. Not really collapsed, but it had a big drop in a few minutes, and it went down from above 100,000 to below 93,000. It has since recovered, and as I am recording the podcast today, a little bit before the close of the market, we're back almost at 102,000 per Bitcoin. Of course, I got a lot of flack online because occasionally I said I didn't think Bitcoin would ever get to 100,000, although there were plenty of times where I conceded that it could get there. I didn't expect it would get there. And but for the election of Donald Trump, I don't think it ever would have gotten there. And I will get into the irony of that a little bit later in the podcast. In the meantime, I want to talk more about the economic data that came out this morning, in particular, the jobs data, because we got some weak jobs data according to ADP. And I went over that weak data on the podcast I did on Wednesday. And I thought that we would probably get a weak report today as well. Well, it turned out that the numbers that we got today were actually better than expected. Not a lot better, but they were better. Although, again, you got to take all these numbers with a grain of salt, because just because we got a better number the first time, we could end up with a much worse number when they go ahead and revise it. And they may not just revise it next month. They can revise it in 6 months. They can revise it in a year, right? They can come back and say none of these jobs were actually created. So all these numbers are meaningless, which is, even more ridiculous that the Fed claims to pay so much attention to this data, right? They're dependent on data that is unreliable. So what does that tell you about the reliability of the Feds and their forecasts? One of the other questions that Andrew Ross Sorkin asked Powell the other day, he mentioned something that Trump said, and I completely agree with Trump on this one. He said that being a central banker was the greatest job in the world because you just show up once a month and flip a coin and everybody thinks you're a god. And I think that's pretty close to probably what's accurate, although they probably don't just show up once a month. They waste their time. The Fed has a lot of employees. What they do, I'm really not sure. But I mean, maybe the Doge Commission can look at the Fed, although the Fed is independent, and realize that we don't need all these pencil pushers over there. The other thing too, hopefully, is they can point out that we don't need a Council of Economic Advisors. We didn't always have a Council of Economic Advisors. That was added somewhere in the 20th century. I forget when. It was after the Second World War. I mean, we actually made it all the way to the Second World War without any economic advisors to the president. And now he has a whole army of them. But we had a much stronger economy before we had economic advisors. So, we don't need those. We can clearly get rid of them. But let me look at these jobs numbers that came out today. So the forecast was for 211,000 jobs. And that was going to come, remember last month we had a really, really weak number, just 12,000 jobs created in October. And so the consensus was for 211,000. And we got 227,000. So a slight beat, well within the range of expectations. It went from a low of 160 to a high of 275. But we did get a revision to the 12,000. They revised it up to 36,000. I mean, still a low number, 36,000, but it was an upward revision. And there was another small upward revision to the month before. Unemployment, however, notched up. It went from 4.1 to 4.2. That was what they expected, but that's what they had. But obviously, unemployment headed in the wrong direction. But the real number in the wrong direction was labor force participation, which dropped to 62.5. That's not a good thing. If you're looking for a stronger economy, you want more people working, not fewer people working. And we got people leaving the labor force. But despite the fact that people left the labor force, the unemployment rate went up, which makes it even more significant because people leaving their labor force in and of itself makes the unemployment rate go down because if you leave the labor force and you were unemployed, once you leave the labor force, you're no longer counted as unemployed, even though you don't have a job. So it's an even bigger boost in unemployment, maybe the equivalent of 4.3, an extra tenth because of that. Now, the private sector payrolls were actually lower than expected. They were looking for 200,000 private sector jobs and just 194,000. So the reason that we had a stronger number was because the government hired more people. Like these are the people that we're supposed to get rid of, right? That's what the Department of Government Efficiency, Elon keeps on tweeting about how we got to get rid of government workers. Well, the government workers are the jobs that we're creating. But I agree, we don't need these jobs. These jobs make us poorer. They don't make us richer. And he mentioned again today on a post that we need to transition people from unproductive government jobs to productive private sector jobs. I agree. That's exactly what needs to be done. But there is some transitionary pain that is going to be associated with that nobody has been prepared for. But the private sector jobs, though, the payrolls were revised up the prior month. It was initially minus 28,000. Right? It was a huge minus number, meaning that all the jobs created in October were government jobs. And that's still the case because they revised upward the private payrolls to minus 2,000, but it's still minus 2,000. So we created 36,000 jobs in total, but we lost 2,000 private sector jobs. That means we created 34,000 government jobs, and those were the only jobs that we created in the month of October. Of course, I don't even believe that those jobs were created because I think all these numbers are just made up anyway. A lot of them come from the birth-death model, and it's just all, one big, guess. Manufacturing, though, continues to be weak. Manufacturing number was below estimates. They were looking for 25,000 manufacturing jobs, and we only got 22,000. That's still a big number because we normally don't create anywhere near that much, but we lost so many the prior month. And in fact, that loss was revised upwards to a bigger loss. It was originally reported that we lost 46,000 manufacturing jobs in October, and now they say we lost 48,000. So manufacturing even worse. Average hourly earnings at 0.4. That's still problematic for the Fed. They were hoping for a decrease to 0.3. 0.4 matches the prior month. And the average work week stayed the same. Actually, it ticked up a bit. It was revised down from 34.3 to 34.2 for October, and it went back up to 34.3 for November. Of course, once again, it's a tale of two job reports. The household survey showed, I think, a loss of 355,000 jobs. To me, that seems more likely. Remember, we lost 368,000 jobs in that survey last month. We lost both full-time and part-time jobs. So I think that's the real tale of the economy, not the government version. And again, that's why Trump was elected. But people now are hopeful that the situation is going to change. Unfortunately, it's more likely to remain the same. Anyway, we got a quick commercial break, so stick around. I'm coming right back. The holidays are all about surprises, right? Well, today's sponsor, OneSkin, is really taking that to heart. As the first company to target skin aging at the cellular level, OneSkin wants to give you the gift of healthy aging free. Throughout the month of December, you'll get a free travel-sized product valued at up to $42 with every purchase. The best part? You'll get a different gift each week. What I like most about OneSkin is the science behind it. They're not just selling you a product, they're offering you real proven ingredients to tackle aging at the root. I've tried it on my face, around my eyes, and my hand, areas that are always in the sun and show age faster than we'd like to admit. My skin feels smoother and healthier. It's really straightforward to use. Just cleanse, dry, and apply twice daily. Founded and led by an all-women team of skin longevity scientists, OneSkin is redefining the aging process
glasses with their proprietary OS1 peptide, the first ingredient proven to help skin look, feel, and behave like its younger self. Get started today with 15% off by going to oneskin.co and using the code GOLD. After you purchase, they'll ask you where you heard about them. Please support our show and tell them that we sent you. So that's 15% off at oneskin.co with code GOLD. Invest in the health and longevity of your skin with OneSkin. Your future self will thank you.
All right, so I got to talk a little bit about Bitcoin. But before I just start going into Bitcoin, I want to speak about what Jerome Powell said about Bitcoin at the DealBook conference on Wednesday, because I actually forgot about that, because I talked about that conference again on my Wednesday podcast, and I totally forgot about that aspect of it. So it's just as well, because maybe it's even more appropriate now with Bitcoin trading at 102,000 per Bitcoin to discuss it. But so Powell was asked about Bitcoin and whether or not he saw Bitcoin as, I think, a threat to the dollar or something like that. And he said, no, I don't think of it that way. I don't see it as a currency. I don't see it as a competitor to the dollar. It's not a currency. He said it's a highly volatile asset that's like gold. He said it's digital gold. And so I see Bitcoin as a competitor to gold, not a competitor to the dollar. And of course, that's exactly what the Bitcoin community wants to hear, right? Because they claim that Bitcoin is digital gold. And so now they've got the chairman of the Federal Reserve making the same claim. So he's validating the idea that Bitcoin is digital gold, right? And I get a kick out of the fact that now all these Bitcoiners, they all love Powell, right? Oh, look, he says Bitcoin is digital gold. Yeah, but Powell gets a lot of stuff wrong, including that. I mean, Powell doesn't understand gold at all. And in fact, gold is a competitor to the dollar. Maybe he doesn't understand that. So if he thinks Bitcoin is digital gold, then it should be a competitor to the dollar, because central banks have a choice. They can hold dollars or they can hold gold. And apparently they can hold Bitcoin, according to Powell. And so it is a competitor, even if you don't think it's a currency. If you think it's digital gold, I mean, gold isn't a currency. Gold is money. So maybe Powell thinks that Bitcoin is money, which it's not. But he clearly doesn't understand gold. He doesn't understand Bitcoin either, right? He doesn't understand a lot. That's why he's the chairman of the Federal Reserve. But he's completely wrong. But this is also helping to power Bitcoin, having the chairman of the Fed basically bless this. Plus, because Bitcoin is now being, part of the U.S., right? It's part of Trump's plan to make America great again, is to make Bitcoin greater again. And now we're trying to marry the U.S. to Bitcoin. This is another irony of Bitcoin, because initially people said, the dollar is going to go down, same as me, right? Dollar inflation, budget deficits, we're going to keep printing dollars. Bitcoin is an alternative to the dollar. You need to buy Bitcoin because the dollar is going to go down. Now they're saying that Bitcoin is the salvation of the dollar. You don't have to worry about the dollar anymore because it's going to be backed by Bitcoin. So we're going to buy all this Bitcoin in a strategic reserve, and that's going to strengthen the dollar. So if Bitcoin is going to strengthen the dollar, then there's no reason to even buy Bitcoin, right? Because if you were buying it because you were worried about the dollar, well, don't worry, because Bitcoin's going to save the dollar. That's another inconsistency, as is the one about the debt. People said, you got to buy Bitcoin because the debt is spiraling out of control. The U.S. has all this debt, and we're going to have to inflate it away. Now they're saying that Bitcoin solves the debt problem, because by buying Bitcoin, and the price of Bitcoin is going to go up so much that the U.S. government is going to be able to pay off the national debt just by selling some of its Bitcoin. So apparently Bitcoin solved the debt problem. But if you're buying Bitcoin because you're worried about the debt, but Bitcoin itself solves that problem, right? You got this circle that doesn't really work. It's kind of like a time travel paradox. But all this stuff is a bunch of nonsense. And you know what? I put a lot more stock into what Alan Greenspan said about Bitcoin. Not when he was chairman, but recently in the last several years. By the way, Ronald Reagan appointed Alan Greenspan. And Ronald Reagan, again, was a real conservative, libertarian, Barry Goldwater guy, philosophically far more, in tune with the stuff that Elon Musk is saying, and the stuff that a lot of, hardcore Bitcoiners believe about the economy, right? And he picked Greenspan because Greenspan was a hard money guy. He was a gold